The world of finance is changing rapidly, and artificial intelligence is at the heart of this transformation. AI is no longer science fiction. It's here, reshaping how we manage money, invest, and interact with financial institutions. From analyzing massive data sets to automating tasks, it is making its presence felt across finance. Banks use it to detect fraud, assess risks, and personalize experiences. Professional and retail investors use it to reduce costs, analyze and research markets, make better decisions, execute trades faster, and achieve competitive advantage. But concerns about data privacy and bias remain. As AI grows, using it responsibly is crucial. AI is transforming investing, making it more accessible and efficient for everyone. For example, AI-powered robo-advisors are transforming financial services by offering automated, algorithm-driven investment advice at a lower cost than traditional financial advisors. The global robo-advisory market was valued at $8.4 billion in 2024 and is projected to reach $69.3 billion by 2032, exhibiting a compound annual growth rate of 30.3%. AI also helps human advisors by automating routine tasks, allowing more focus on clients and strategy. But as it grows in finance, we must ensure these tools are fair and free from bias. The financial markets generate an overwhelming amount of data every second. Stock prices fluctuate, economic indicators are released, and geopolitical events unfold, all of which can impact market sentiment and investment decisions. For human analysts, keeping up with this constant flow of information and making sense of it all is a daunting task. This is where AI excels. AI algorithms can process and analyze vast data sets far faster and more efficiently than humans ever could. By identifying patterns, correlations, and anomalies in financial data, AI can uncover hidden insights that would be impossible for humans to spot. For example, it can analyze news articles, social media posts, and even satellite images to gauge market sentiment and predict stock price movements. By detecting subtle shifts in language and sentiment, it can identify emerging trends and anticipate market shifts before they happen. However, it's important to remember that AI is not a crystal ball. While it can provide valuable insights and predictions, it's not infallible. Financial markets are inherently complex and unpredictable, and there will always be factors that AI algorithms can't account for. A new generation of AI-powered tools and platforms is empowering investors of all levels to make smarter, data-driven decisions. These tools leverage AI to automate data collection and cleaning, perform deep analytics on structured and unstructured financial data, extract insights from documents, and provide predictive analytics and sentiment analysis. This enables faster, more accurate market research and investment decision-making compared to traditional manual methods. One example is sentiment analysis software like Bloomberg Terminal and Betterment. These tools scan news articles, social media posts, and other online content to gauge public opinion and sentiment towards specific companies or assets. By understanding how the market feels about a particular stock, investors can make more informed trading decisions. Another example is AI-powered trading platforms like Finance GPT, Sentio, and Kahoot. These platforms use algorithms to analyze market data, identify trading opportunities, and even execute trades automatically on behalf of the user. While these platforms are often used by professional traders, they're becoming increasingly accessible to retail investors as well. These tools demonstrate how AI is leveling the playing field in finance, providing individual investors with access to sophisticated analytical capabilities that were once available only to large institutions. The human mind, while remarkable in its own right, has limitations. We are prone to biases, emotional responses, and cognitive shortcuts that can cloud our judgment, especially when it comes to financial decisions. AI, on the other hand, can process information objectively and identify patterns that might escape human perception. That is why professional and retail investors rely heavily on AI tools like Bloomberg and Kahoot. Their predictive power is particularly valuable in risk management. By analyzing historical data and identifying patterns that have led to market downturns or financial crises in the past, they help investors anticipate and mitigate potential risks in their portfolios. Moreover, they continuously monitor market conditions and economic indicators, alerting investors to potential threats or opportunities in real time. This allows investors to react quickly to changing market dynamics and adjust their investment strategies accordingly. However, it's important to note that AI's predictive ability is not foolproof. The financial markets are influenced by a multitude of factors, some of which are inherently unpredictable. AI can improve our understanding of market dynamics and enhance our decision-making, but it cannot eliminate risk entirely. Building and managing an investment portfolio is a pretty complex task that honestly requires constant monitoring, rebalancing, and optimization. Traditionally, this has been the domain of human financial advisors, but AI is rapidly changing the landscape of portfolio management. AI-powered portfolio management tools, Kahoot or Finance GPT, can analyze your financial goals, risk tolerance, and investment time horizon to create a personalized investment strategy. These tools can then automatically select and allocate assets within your portfolio, making sure it stays aligned with your investment objectives. Moreover, AI can continuously monitor market conditions and adjust your portfolio accordingly, rebalancing assets and taking advantage of emerging opportunities, all without needing constant human intervention. This dynamic approach to portfolio management can really help investors achieve better returns while minimizing risk. The automation of portfolio management not only frees up time for human advisors to focus on more strategic tasks, but it also makes sophisticated investment strategies accessible to a wider range of investors. This democratization of portfolio management is one of the most significant impacts of AI in finance. Robo-advisors are, without a doubt, the poster child for AI in finance. These digital platforms provide automated, algorithm-driven financial planning services with little to no human intervention. By leveraging AI's ability to process vast amounts of data and identify personalized investment strategies, robo-advisors are making investing more accessible and affordable for the masses. Their beauty really lies in their simplicity and affordability. Typically, users answer a series of questions about their financial goals, risk tolerance, and time horizon. Based on these inputs, the robo-advisor's algorithms create a diversified portfolio of exchange-traded funds that align with the user's investment objectives. Robo-advisors typically charge lower fees than traditional human advisors, making them an attractive option for cost-conscious investors, especially those just starting out. They offer services at fees ranging from 0.25% to 0.50% of assets under management, making them more affordable than traditional advisors who typically charge 1% to 2%. Moreover, they provide 24/7 access to your portfolio and offer automatic rebalancing and portfolio monitoring, ensuring that your investments stay on track. While they may not be suitable for everyone, especially those with complex financial situations requiring personalized advice, they represent a significant step towards democratizing investing and making financial planning accessible to a wider audience. For too long, access to sophisticated financial advice and investment opportunities has been limited to a privileged few. High fees, minimum investment requirements, and a lack of financial literacy have created barriers to entry for many individuals, particularly those from underserved communities. AI has the power to break down these barriers and democratize finance like never before. For example, robo-advisors have lower or no minimum investment requirements, opening investment opportunities to a broader audience, including beginners. They also provide 24/7 access through online platforms and mobile apps, offering convenience and flexibility. By automating tasks, reducing costs, and providing personalized financial guidance, they empower individuals from all walks of life to take control of their financial well-being. Imagine a world where everyone, regardless of their income level or financial literacy, has access to affordable AI-powered financial planning tools. Imagine a future where AI helps individuals make informed decisions about saving, investing, and planning for retirement, regardless of their financial background. This is the promise: to create a more inclusive and equitable financial system where everyone can build a secure financial future. As AI continues to reshape the financial landscape, it's important to remember that this is not about replacing humans with machines. Rather, it's about creating a powerful synergy between human expertise and AI's analytical capabilities. The future of finance lies in this collaborative partnership. AI will continue to automate tasks, analyze data, and provide insights, while humans will focus on strategic decision-making, building relationships, and providing personalized guidance. This partnership has the potential to create a more efficient, transparent, and equitable financial system for everyone. Additionally, ongoing advancements in AI and machine learning are enhancing the capabilities of robo-advisors, enabling them to provide more sophisticated and personalized advice. Robo-advisors are also increasingly integrating with traditional financial services, offering a more comprehensive and seamless experience for investors. By leveraging the strengths of both humans and machines, we can unlock new opportunities, drive innovation, and create a more prosperous financial future for all. The journey ahead is not without its challenges. We need to address concerns about data privacy, algorithmic bias, and the potential for job displacement. However, by embracing a human-centered approach to AI development and deployment, we can harness the transformative power of this technology to create a more inclusive and prosperous financial future for all.